Hello everyone, welcome to the Rockhampton Buyer Property Market Update for October 2023. It's been quite a while since I've looked at Rockhampton, so I'm really keen to dive in and unpack just what's been going on in this marketplace. So if you are someone that's looking at potentially buying in this market, if you're planning to invest or if you're a struggling home buyer in the region right now, stick around because you are going to get a ton of value. And for those that don't know me, my name is Troy Simbasini, and just to set some context, I'm a husband, a father, I'm a double degree graduate in business and commerce. I used to play semi-professional rugby league for the Central Queensland Capras, so I spent a lot of time in the Rockhampton property market itself. And yeah, I own a business there called Capricorn Life Buyers Agency, and we do help a lot of home buyers and investors navigate this market. But if you do have any questions about me, feel free to leave a comment in the comment section or just send me a message. More than happy to, give you further insight about me and my life. Cheers, guys. So here's just some context about the businesses that I own. So Capricorn Life Buyers Agency is our Central Queensland based brand, and we focus on helping home buyers and investors navigate the Central Queensland property market. Tropical Life Buyers Agency is our Cairns and Townsville based brand, and we're helping sort of home buyers and investors navigate those marketplaces. And Sunshine Life Buyers Agency, we just recently established an office in Noosa, shortly expanding into the Brisbane and Gold Coast area as well. So basically I have a brand and a business that has the potential to help you navigate the Queensland East Coast property market. And that's just some figures around what we've done to date and who we've helped. Cheers, guys. Now, if you're a home buyer or investor that's looking to buy in Rockhampton or the Central Queensland area and you feel as though you might need some help, or if you're just struggling generally to try and find something or buy something, feel free to reach out to us. More than happy to have an initial chat, see if we might be able to add value to what you're trying to achieve here in Central Queensland. And those are our details there. You can look us up on our website, give us a call on that number, visit us on our socials. You can check me out on Instagram and LinkedIn also, guys. Thank you. Okay, so for those that have seen my market updates before, know that I follow a very data-driven process in terms of how I break down and analyze the market. So it can get quite data heavy, and if you aren't analytical, it can be quite hard to digest. But look, I promise you I'll keep it as simple as possible. If you do have any questions or if you're struggling to follow along and you need something clarified, leave a comment in the comment section. I'm more than happy to circle back and address that at a later date for sure. But basically all I do is look at different data points in relation to what's happening in the property market to try and diagnose and temp check what's going on. So the different data points we look at is what's happening on the capital growth side. Is it going up? Is it going back? Is it stagnated? We'll look at things such as the listing volumes to diagnose and temp check what's happening on the supply side of the market. Then we peek our head over the demand side, looking at things such as days on market, online search interest rates, absorption rates. And then for those that are investing, you'll like that we cover what's happening on the rental side in terms of vacancy rates, median rents, etc. So you're going to get some really good insight there. And then basically what I do is I finish off by looking at what's happening in terms of supply and what that's likely to do to the current marketplace. If there is low supply or a lot of new supply, what does that mean going forward? And then I finish off with a summary and some tips to navigate the marketplace for both investors and home buyers. So stick around, guys. I'm keen to dive in. Okay, let's start off by looking at the median house price trend. So the typical house price in Rockhampton currently sits at $380,000 in September 2023. Over the last 3 months, it's grown by 1.4% or $5,000. And year to date, it's grown by 5.8 so far. So look, guys, there you have it. That's quite interesting to see that year to date it's up, and over the last 3 months it's up. And look, that's despite, I suppose, all of the headwinds and negative sentiment that's been sort of cantering the market of late, particularly those high interest rates, as well as a lot of the doom and gloom in the media about the property market potentially crashing. So that sort of kept a lot of people on their toes in relation to buyer activity. But we can see Rockhampton has certainly not been impacted at all from a lot of the, I suppose, macro things that have been happening in the space in relation to interest rates and what's been going on in the media. And look, I suppose my tip there is to say that if you are someone that was hesitant around what's going on with the property market and you sat on the sidelines, it's costed you money, you sitting on the sidelines, and obviously this is the median here. So overall, that median has grown by 1.4% to date over the last 3 months. So on the median, you will have to pay essentially an extra $5,000. But if you do dive into individual suburbs, you're probably going to pay a lot more than 1.4% in this instance. So yeah, if you are someone that has sat on the sidelines, sitting on the sidelines can be quite costly. The longer you sit out, the more money it's going to potentially cost you to buy the same property in Rockhampton, because the market is moving along. And look, it's good to know for investors as well. Look, it's probably not going to hit double digit capital growth this year, but to currently sit at 5.8% in September on a, I suppose, year-to-date basis, it's good to know for investors that Rockhampton is a market where prices are going up, and people's, I suppose, equity and money that they've invested in the area is appreciating in the assets that they buy here, that they bought here. And going forward, look, I don't have any crystal ball in relation to what's going to happen. I would love to have a crystal ball, but going forward, all we can really look at is a combination of macro and micro fundamentals to determine, what's likely to happen to this typical house price. One of the things that I can say is my office on the ground, we've seen a lot of activity, particularly in relation to buyers from southern markets, Sydney, Brisbane, Melbourne, other parts of regional Queensland as well, that are migrating to Rockhampton to take up work and lifestyle options. And a lot of these people have rather big budgets as well. So when you look at that median house price in relation to a lot of the people that are moving here with higher budgets, it's still a very affordable market, and it has a median house price with a lot of wiggle room, particularly to catch up to those that are a lot more bigger in terms of regional centres. Like Cairns has a median house price of over $500,000 now. Look at places like Bundaberg, that's creeped up above $400,000. So when you look at Rockhampton relative to other big regional hubs, in addition to the capital cities, it's still a very affordable property market. But yeah, guys, that's sort of what's happening in terms of the median house price trend in Rockhampton of late. If you do have any questions in relation to this, let me know in the comments. Now, here's what every suburb across Rockhampton has done over the last 3 months. So we can see here that the affordable and high end seem to be showing no signs of slowing down. And look, by high end here, all I mean is the suburbs that are more expensive, those that are generally over $500,000 in this instance, and there's not too many that are actually over that $500,000 median price tag in Rockhampton. I think only the Range and Norman Gardens at this stage. But if you look at that, right, that table, this is not every suburb, sorry, in Rockhampton, but this is basically all of the big suburbs that are captured here, and there's only a couple more that I've left out, but majority of the stock that is available in Rockhampton for purchase mainly consists in these areas here, right? So as you can see, basically from the top to the bottom, everything is green, which shows that over the last 3 months, every suburb is continuing to rise in value, all at their own different speeds, of course. And as you can see here, every suburb year to date has also rised and done very, very well. And some of the, I suppose, impressive numbers there, on a year-to-date basis, you have West Rockhampton at 7.6, you have Brassica at 7.2, you have Frenchville at 7%, and then followed by the rest. But look, guys, if you do look at those median house prices in those different suburbs, I can say if you are investing, you can still get positive cash flow in the best part of all of those suburbs there, I can imagine, given those median house prices still sit well below $550,000 up to $600,000 usually when you start to move into neutral or negative territory. So a lot of the positive cash flow opportunities look to be still available in Rockhampton, given that median house price in those two high-end suburbs only still sit under $550,000, which is good. And look, again, these are the median house prices here, guys. So every suburb, there's obviously properties within that suburb that sell on the lower end and that sell on the high end, and some that sell right at that median house price point. So do your own research, look at these suburbs individually, and then go about making a buying decision from there. If you are a property buyer, again, as I said in the previous video, if you are someone that is sitting on the sideline waiting to see what's happening, you can see here that it's going to be costing you money the longer you sit out, because over the last 3 months all of these suburbs have basically gone up by over 1%, and it can cost you money, and maybe the longer you wait, the more it's going to cost you in that instance. But anyway, guys, that's sort of a peek behind the curtains as to what's happening with individual suburbs in Rockhampton. Okay, let's have a look at what's been happening on the supply side of the market now. So really, when you do look at what's likely to happen with a property market, it all boils down to the fundamentals of supply and demand. So let's take a look at what's happened in terms of the listing volumes in Rockhampton. So we can see here that the stock levels are currently sitting at 0.2%, which means there are approximately 99 houses currently listed for sale in September, and that's down from 130 in June. So 0.2% in terms of our supply market, that is very low, because if you look at that relative to the population size, Rockhampton has I'd probably say close to over 100,000 people if you included Yeppoonam, Yupark, and some of the other surrounding towns. Relative to that population size, to only have the best part of 99 properties available each month for purchase is very low relative to that, right? And if you can see there, we've had a bit of a spike back in 2021 in terms of supply, and then basically since 2021 the market has just been contracting, and supply is almost now at an all-time low here in Rockhampton. So that's very interesting, right? So if we have a situation here where the Rockhampton property market is at an all-time low in terms of its level of stock, in terms of its level of supply, and if demand relative to that is high, then that basically can only mean one thing, right? Prices have to go up or continue to go up. There still may be situations where if a property does become available in a particular suburb, then there's going to be multiple bidders fighting over it, because there's just not enough listings available to cater for that demand in the marketplace. And when you have situations where multiple people are bidding for property, obviously people are going to put their best and final offers forward in a multiple offer situation, and then pay most likely over the list price. And then when you have that happen at such a large volume and at scale, then that drives up that median house price in a particular suburb. So yep, guys, pretty grim looking at those figures to see that stock levels are at an all-time low in Rockhampton. Okay, let's take a look at the individual suburbs and their listing volume. So we can see here that West Rockhampton is the suburb that appears to have the lowest supply of stock coming onto the market since June 2023. And the average listing velocity across each suburb is very low except Gracemere. So those listing numbers there are basically all the listings that have come up over the last month. And we can see here basically its rank for that period. And yeah, look, guys, you can see, there is a bit of a correlation there with the data between the smaller suburbs and the larger suburbs. Some of the larger suburbs like Frenchville, Norman Gardens, Bersica and Gracemere, even the Range, they're a lot bigger in nature when you start to compare them to Kawana, West Rockhampton and Wandle. They're quite small in nature, so obviously their listing volumes are going to be different. Just purely based on the amount of stock that's available there anyway for sale, and there's going to be a natural, suppose, inclination towards them being of a higher listing volume because of those levels of stock that are available there. And look, if you're an investor, I just want to say, just because those three suburbs have extremely low levels of supply, that doesn't necessarily mean that it might be a good investment opportunity. Always do your own individual research on those suburbs to determine whether or not it's investment grade in nature. But again, when there is a suburb that has low levels of supply, and if it has strong demand side metrics, then you might be in a situation there, if you're an investor, where you could potentially jag a good investment where supply is a lot lower than demand, and you're going to be in a situation where your property might go up in value for the time being in this current state of the Rockhampton property market. And I suppose, look, if you are a home buyer or even an investor, a large portion of the transaction volume is happening in the bigger suburbs, right? So if you have your eye on those particular suburbs, you can get an idea now on what the average listing velocity does look like. So basically, on an average basis, you have, the best part of 36 opportunities for Frenchville, for example, to buy something in that suburb, right? Or you have 62 properties there to potentially buy in Gracemere at any given time. So you kind of can sort of go, okay, well, based on the listing velocity I see in a particular suburb, I know how many opportunities that might potentially come up. And then I can start to figure out what type of buying strategy there or what type of system I can put in place to navigate that market. But yeah, guys, that gives you a peek behind the curtains about the supply in different suburbs across Rockhampton. Okay, now the other supply side metric we are looking at here is the level of inventory currently available in Rockhampton. And the difference between inventory and listing volumes, right? You think about it, listing volumes, they come on the market every single month, right? Properties come on the market every single month, but that doesn't necessarily mean that every property sells in that particular month it comes on. So there's always a rolling pool of properties that are available at any given time for purchase, because some properties might sell that month, but some might then roll over to the next month. So you always have this rolling pool of inventory. And basically what this graph is telling us here is that the inventory levels in Rockhampton are basically at a 3-year low, down to around 0.6. So the market there has just been contracting and contracting now. And if you do boil this down right to its fundamental level, we can certainly see here that based on this inventory graph, demand is heavily outstripping supply, because the amount of listings that are going onto the market each month and the amount of inventory that then sits on the market at any given time has started big, and each time it's just gotten smaller and smaller over the last 3 years, because that listing volume just hasn't been enough to keep up with the rate of demand. Obviously, we've had a slight tapering off of supply over the last 3 years as well, but this basically illustrates that supply may be very, very high here, and there's just not enough stock available in the marketplace to cater for demand. And it's now at a point now that suggests that if the current listings on the market, right, are there to stay and there was no new supply, let's say the market became redundant and all the property market and all buyers had to purchase was the existing stock available, it would basically be all gone in 2 weeks here, this graph is suggesting. So based on the demand, based on the listing volume, based on the demand, everything will be sold in 2 weeks. And for a market like Rockhampton, that just goes to show that demand is very, very high. So if you are a property investor or a home buyer, you are in a competitive environment here by the looks of things. And I think from a buying strategy point of view, you need to start to rethink maybe what that looks like and maybe be more aggressive with your offers, be more fair income with price, and be more, I suppose, rigid with your terms going forward. But yeah, guys, that's a peek behind the curtain on one of the other supply side metrics we look at, which is inventory. Okay, so we've had a look at the median house price trend for Rockhampton as a whole, as well as sort of took a peek behind the curtains as to what some of the individual suburbs are doing. And we've seen that Rockhampton is churning along really well, and many of the individual suburbs are incrementally increasing as well. And some of the year-to-date figures are really, really good. We've had a look at the supply side, and the supply side tell us that listing velocities are quite low, and then that's resulted in, I suppose, a contraction or contracting of the inventory pool over the last 3 years, now to a point where it's at an all-time low. So we've looked at median house price and we've looked at some of the supply side metrics. Now I want to take this opportunity to dive in and have a look at what's happening on the demand side, particularly because that's going to really determine whether or not that median house price continues to grow, and many of the suburbs continue to see those fantastic numbers in terms of the medium and year-to-date growth that they've experienced. And two of the good demand side metrics that I like to look at are days on market and vendor discounting. So for those who are unfamiliar with days on market, all that basically is When a property goes online, how long or how many days is it taking to sell? And usually properties that sit on the market for a very long time, the days on market are usually high, so that means that the market isn't as hot. And the properties that sit on the market for generally less than 30 days, which is quite a low number, then a market is in strong demand there. And then when it comes to vendor discounting, all that basically means is for every property that gets listed, the vendor, the seller, has to make a price adjustment of X% in order for the property then to change hands or be bought. So usually in that instance, when a vendor discounting rate is very low, under usually 2%, that suggests that the market is quite strong in terms of its demand. But let's take a look at the slide. So it's telling us that Rockhampton September days on market sit at 44, which has been much of the trend for 2023, and we've seen vendor discounting currently sitting around 1.5% in September. So Rockhampton sitting at 44 days on market. To me, I think that's still a very healthy market. Demand is still relatively strong here because if you think about it, right, in Queensland, the average contract period is around 30 days. People sign a contract in day 1 and they're usually settling on day 30. And if Rockhampton is currently sitting at 44 days, that means that your average property in Rockhampton is probably selling within the first sort of 2 weeks or 14 days. So 30 plus 14 gives you that 44 days on market metric, and which that's still really, really fast, right? That basically only means that most properties are only having 1 or 2 open homes before they are sold. Now look guys, that's obviously Rockhampton there as a whole, and there are many properties that will probably take a lot longer than 44 days to sell, and then a lot of properties that take a lot less than 44 days to sell. Like we put an offer on a property last week, me and my team, in Norman Gardens, and it was gone within 2 days of being on the market. Like it was under contract. So you have to sort of treat every property and every suburb on a case by case basis. But we can see here that it's been much of the trend for 2023, which is interesting. So that suggests that we're not in an environment where it's a complete frenzy. We're in an environment where things are taking on average around 2 weeks to sell. So what does that tell me? If you are a property buyer, investor, or home buyer, you only really have a 2-week window there before most properties are under contract. So I think you might have to be quite swift and quite quick there when things go on the market. Get through, inspect it, or if you're interstate or geographically challenged, get a video walkthrough done and then put your offer in straight away, because things are getting grabbed and bought very quickly in this marketplace. So I think that's a key lesson for those that are buying right now or looking to buy in the area. And then with the vendor discounting, it currently sits at 1.5%. So that tells me that the demand here in Rockhampton is very, very strong and it's very healthy, because usually anything under 2% suggests that most people are buying property either over market value, at market value, or slightly under. So let's say the average $500,000 property only has to make a slight price adjustment there of 1.5% in order for it to be sold. So yeah, that's very interesting there, guys. Obviously, this is at an aggregate level there. What we find, most of the properties that are discounting in the Rockhampton marketplace tend to be the ones that have went to the market with an unrealistic price guide. So agents are making those price adjustments. And then we've obviously seen a lot of properties that are old and quite run down sit on the market for quite a long period of time. So people make price adjustments and have some concessions on their price in order just to get it sold. So it does sort of skew the vendor discounting rate there to some degree in certain property types and in certain suburbs. But overall, guys, like I think if you're a buyer in the marketplace, as I said, if you treat it on a case-by-case basis, obviously you have roughly around a 1.5% buffer there to, if you see a $500,000 property go on the market, then you might have a sort of 1.5% buffer there to put an offer either slightly above that or around 1.5 or slightly under that. I think you might be in the ballpark figure there. Obviously, every property is different. Take that advice with a grain of salt, but based off this data, that's what it's telling us here, guys. But yep, days on market and vendor discounting so far is telling me year to date and September 2023 that demand is looking pretty healthy in Rockhampton. Okay, let's dive in and have a look at what's going on in each individual suburb from a days on market point of view. Let's start with the summary here. Frenchville appears to be selling the fastest, well below the average days, and the range is currently taking the longest to sell. So we can see here Frenchville number one at 18 days in terms of its average day on market. Now look guys, that is insane, right? That is a very, very hot suburb. That would suggest with an 18-day days on market number that most properties are selling within the first 1 to 3 days of it going on the market to have an average of only 18 days. And in that instance as well, given that it's a lot lower than 30 days, which is generally the time frame you would need if you're subject to finance, what that is telling us there, given that it's a lot lower than 30 days, that suggests that there is a lot of cash buying related activity and unconditional contracts in and around this suburb in Frenchville, as well as Norman Gardens, Kawana, and West Rockhampton. Look, I can probably tell you that West Rockhampton and Kawana, we went back and looked at those listing volumes, and I mentioned they're relatively small suburbs, so naturally things that come online there are moving very fast, just given that there is such a low velocity of listings that happen there. But you can certainly see Frenchville and Norman Gardens are the hottest suburbs in Rockhampton. Look, if you are an investor, it's good to know that these are the suburbs that are in highest demand, but at the same time, if you are an investor or home buyer, that just means that those suburbs have a lot of competition and you have to be very fast there. And it looks like you most likely be competing with a lot of cash buyers and a lot of people that are prepared to offer unconditional based contracts, given that days on market number is a lot lower than 30 days. And then you can see here all of these other suburbs then that come in. Versica at fourth at 27 days, which is still very, very strong. Wandle at 7th, Parkhurst at 5th, and the range at 8th with 34. Look, the suburb here, the range, that's at 34, and that's the 8th ranking suburb. So most of these suburbs are selling within the first week or two that most properties are going on the market, and then obviously everything in green is selling within the first few days. Crazy demand here in Rockhampton right now. Okay, hey, look, guys, just a quick update. The baby that was screaming in the background a minute ago, that was my daughter. She's 2 years old. I'm filming this on a Friday afternoon in my home office. She's running an absolute muck on our babysitter. Hopefully, my wife should be home soon and, yeah, can take care of her because she seems to be just in a bit of a grumpy mood at the moment. But all right, guys, let's dive into the next demand side metric, which is online search interest. And for those who are unfamiliar with online search interest, basically all that means is on the portals of realestate.com and Domain, this is the amount of clicks every listing gets or impressions every property gets in a particular suburb. So Domain and realestate.com collates this data and releases it to the public, and that gives us sort of really, I suppose, quite indicative demand side figures, because there are a lot of window shoppers out there. But in saying that, a lot of people do use realestate.com and Domain when house hunting. So when online search interest is high in a particular area, we kind of know then that, hey, there is a lot of potential interest in this suburb. So that's what online search interest is, guys. So we can see here that the range in Rockhampton currently has the highest online search interest rate for an individual suburb. So we can see here that it's ranked number one, and it has about 1,302 clicks for every property that gets listed. So look, guys, it's not, this data doesn't say that, hey, there's 1,000 people lining up there to buy that in that suburb. No, this is just saying that impressions and clicks, the amount of traffic that flows in and out of realestate.com and Domain, it's reflecting that there are about 1,300 clicks per property in the suburb of the range, and that's followed by Versica with 1,100 and Frenchville with 1,100 also. It's very interesting, right? Because we had Frenchville with the days on market of 18, which was the lowest day on market across all of the suburbs in Rockhampton. However, here, in terms of online search interest, it's actually coming number 3, whereas what you would usually think is, if Frenchville days on market is so low and demand is so high, wouldn't that have the highest online search interest? look, I suppose it just comes back to who's active in the marketplace and what stock is coming online that people want to actually buy, right? Because there could be, huge demand for the range. However, there's just not the right stock coming on that people want to buy. So it still has a high online search interest rate, but it has a low, a high day on market figure, for example. But look, guys, that gives you an indication on what people are searching for online, some indicative figures there. So if you are an investor, it's a good sort of metric to sort of diagnose and temp check, what interest people are having in certain suburbs in Rockhampton. And we can see here number 9 is Kawana with the least. So yeah, very, very interesting, this data. Okay, guys, we've made it. This is the last demand side metric here, which is absorption rate. So stick with me, guys. We've got a couple of more slides to go through, and I promise you there's going to be some good value towards the end, particularly if you're a home buyer or investor needing some tips to sort of figure out how do I navigate this marketplace. So I've got some good value coming soon. But yeah, guys, for those who are unfamiliar with the absorption rate, basically it's a very simple calculation. All it is this is the amount of total listings that we've collated over a certain period in terms of data. This is the amount of sales, and then when you divide the listing volume versus the amount of sales, you get an absorption rate figure. And we can see here that the overall absorption rate figure in Rockhampton is 75%, which is still very, very high for an absorption rate, and that was from the July to September period this year. However, this is actually down from 95% during January to March 2023. So very interesting, right? A healthy market in terms of demand generally sits above 65%. Here, Rockhampton is at 75%. So that basically suggests that every property that goes onto the marketplace in Rockhampton from July to September, 75% of them have transacted, they've been sold. And it's actually decreased by a few percentage points, down from 95% during January to March. So there's been a slight tapering off there of the overall absorption rate. I wouldn't be too concerned there, as the market might be slowing down, or something must be happening here. If you're an investor, don't get too worried. I wouldn't read too much into that just yet, but overall that absorption rate is still very, very healthy, guys, at 75%. Okay, now we're up to what's happening on the rental market side of things. So if you are a home buyer, I think you should fast forward a couple of slides and get to the end, because I don't think this section of the update is relevant to your situation. But investors, stick around. I think there's a lot of value here and some gold nuggets you could extract out of this rental market data. So we can see here that vacancy rates are on a downward trend after a small spike a few months ago, now sitting at 1.6%, with only 61 vacancies currently available for rent across Rockhampton. So if we actually look at that long-term trend, it's certainly sat at around, I'd probably say 1.2%, and we had a recent spike there 4 months ago, which would be what, June, July, and now we've started to taper off a little bit there, and that vacancy rate dropping back to currently around 1.2%. Now, if we do look at, I suppose, those vacancy rate figures, there's not a whole bunch of properties there that skews that data, right? So the difference between a 1.2% vacancy rate and a 1.6% vacancy rate is only 20 properties. So, there's not a whole bunch of listings here that throw out the data enormously. No, only a small amount of properties actually throws out the data. So relative to the market, it's actually quite a really good vacancy rate trend. And for Rockhampton, to have over 15,000 houses here in the marketplace available for rent and for occupancy, just for occupancy in general, to only have the best part of 61 of those available at any given month is very low numbers in terms of supply. So we can certainly see that that's a good thing with those vacancy rates really low for investors, and that just goes to to show that if you are investing in the area, it gives you good confidence knowing that, hey, if I did buy an asset here, will I get it rented, and will it get rented at a premium? Yes. When the vacancy rate's around that 1%, there's not a whole lot of bunch of competition, and yeah, you can certainly get a good tenant in there and get market-based rent, which is a good thing. So that's sort of what's happening on the vacancy rate side of things, guys, in Rockhampton. Okay, let's have a look at each of the individual suburbs and their rental supply. So we can see here that West Rockhampton is the suburb with the lowest supply of rental stock, and Kawana currently has the lowest vacancy rate in September. And I know you're probably thinking, oh, why does West Rockhampton have the lowest stock, yet Kawana has the lowest vacancy rate? So you have to remember that the vacancy rate is relative to the amount of stock within the suburb, right? So if a suburb is bigger in nature and there is a small amount of supply there, then the vacancy rate relative to the amount of properties available is going to be lower. Whereas if the suburb is smaller in nature and there is a bigger percentage of properties available there for rent, then the vacancy rate is going to be high in nature. So that's sort of how the vacancy rate works. It's very weird. So we can see here that, look, if we looked at just the median rents for each of the suburbs alone, first and foremost, we can see that Norman Gardens has the highest median rent with $520 per week, followed by Frenchville at $500 per week, and then Parkhurst at $480, and the Range at $480. So only Frenchville and Norman Gardens have a 5 in front of them at the moment in terms of their median rent. However, guys, just from my experience and buying property in and around Rocky, I can tell you that most of the properties in Frenchville and Norman Gardens, particularly the 4-bedroom, 2-bathroom, 2-car properties on over 600 square meters in the really good pockets, they're all renting for $600 plus per week, right? And even in the Range and even parts of Wandle, most of those properties are like around 500 or 550. But what's dragging down the median is some of the stock within the suburb is obviously older, established, have less bathrooms, less bedrooms, so they rent for a lot less. So we have a whole bunch of properties in Norman Gardens and Frenchville currently now renting for around $600 per week, and then we have some lower end stock renting for around $400 a week, $450. So that brings that median rent up to around 500 or 520 for those suburbs like Frenchville and Norman Gardens. And if you actually look at Gracemere here, Gracemere actually had the highest amount of rental stock available relative to the suburb. So at 36, 39. And what that basically means is there is a whole lot of investor activity there potentially, right, in that suburb. Right? And Gracemere is historically known for that having investor to owner-occupier ratio that's very high. So usually when you're investing, you kind of want to stay in suburbs where the owner-occupier percentage is a lot higher. That gives you stability. It gives you, I suppose, better upside for capital growth because you're more or less surrounded by a lot of people that are owner-occupiers, and owner-occupiers are the ones that are driving up house prices. Whereas Gracemere, as you can see here over the last 3 months, it's basically double to many of these other suburbs in terms of the amount of rental stock available there. So I suppose if you do buy in Gracemere, you just have to be aware that your property does have a lot of competition there, given that there's so much investor activity and investor-owned properties out there that are for rent. But nonetheless, guys, all those vacancy rates are around 1%, which is good, very strong. So if you are investing, you're gonna get someone in your property, that's for sure. And if you do break that down, right, this is over the course of 3 months. So there's not a whole lot of properties that are coming onto the market each month relative to the population size of Rockhampton, like over 100,000 people, and you've only got 10 to 12 properties coming on in most of these suburbs each month available for rent. That's not a whole lot of options here. So you can certainly see why rents are high and the trend of rents have been really good in this region. Okay, you've made it this far, guys, so stick with me. A couple more to go. Look, as part of the market update today, We've started off by looking at the median house price trend and what that has done, right? And we've certainly seen a market here in Rockhampton and individual suburbs that keep growing right now, month on month, and year to date, it's grown. We've also looked at the supply side of the market, and we can see that supply has been rather grim, right? We've seen a contracting there of inventory, we've seen low levels of listing volumes, and we've seen certainly that demand is outstripping supply when we've looked at those demand side metrics as well, like days on market, vendor discount, and the absorption rate. We've seen those high online search interest rates, and then just before we've looked at what's happening on the rental side. So if you are an investor, right, the opportunity that exists here is pretty good, right? But it is only good or sustainable if the market, from a supply point of view, remains low. You don't want to be parking your money here as an investor if all of a sudden there is a bunch of new construction, hundreds and hundreds of properties being built and coming in and flooding the market. That's going to create more competition for the property you own, and it's going to create more competition for purchase, and it's going to certainly erode away yields, as there's going to be more opportunities for people to rent and not many people forced to really pay a premium for property because there's so many alternative options. So the opportunity in Rockhampton only exists if supply is low, and I like to look at supply data, and that starts to paint a picture as to whether the opportunity is still really good in Rockhampton, particularly if you are investing. So we can see here that from a building approvals point of view, there's been a total of 140 building approvals for year to date for the 2022 to 2023 financial year. So that obviously passed, right? But that's still the best part of 6 months of this year. And you can see there, like basically we're still very fresh from July now to September. So we're only 3 months into the new financial year. So you can see there, like it's still really, really low, those numbers, and naturally approvals are going to start to pick up. But what I want to refer to in this graph is that we've seen a trend in Rocky basically from 2001 to 2008, where there's been a whole lot of building approvals, right? Construction here was booming, a lot of subdivision, a lot of new construction happening. And then from 2008, basically up until 2011, it started to slow down, and then it picked up a little bit between 2011 to 2018, and then it since dropped off from 2018 to basically where we are today. It's sort of trended very low, and what that means is that if it's trended very low of late, right, from 2018 to 2023, that means that a lot of the new opportunities that are going to be available in the marketplace may not be there in the future because of that low trend. If we've seen, let's say 2019 and 2020 from this graph, really, really high levels of building approvals, particularly up to the same levels as 2006 to 2008, where it's been really high. That means that over the next 2 years, we will start to see the market injected with new supply. Because if you think about it, right, most of the developers, they have to go through an approvals process that can take 6 to 12 months, even up to a year or more. Then obviously go through the finance stages of getting their development financed, and then construction, which is like another 12 to 18 months. And then an end product hits the ground, right? The property becomes available for purchase or for rent. And if you looked at those trends from basically 2019 to 2021, there's not a whole lot of new approval there. So that would mean basically beyond 2023 right now beyond 2023, there's not a whole bunch of new supply coming into the marketplace, unfortunately. So we may have an environment here where the future supply pipeline of the Rockhampton property market is low, and what that would mean is it's going to continue to put, I suppose, upward pressure on house prices, because when there's not a lot of new supply options, then people are basically fighting over the existing stock that's available, established construction, rather than purchasing new builds. And look, it's a big issue just across the board. The building industry as a whole across Australia, it's been hit very hard. A lot of big builders are going bust. A lot of big developers are going bust because of high interest rates because of the cost of construction now. Labor is very expensive, and it's actually caused a bit of an issue when it comes to new construction because there's just not enough stock being produced. And then what's happened is the whole sentiment around builders going bust and even the high construction fees now associated with building a new home is actually scared a lot of people away from potentially investing in a new build, right? I've seen it as a trend happen in central Queensland as well as other parts of the country where a first home buyer, rather than rather than build a new home, they're opting to go down an established pathway, buy an established house, maybe renovate it, or buy an established property that's been recently renovated, because that's a lot cheaper than a new construction right now, because the cost per square meter costs for a new construction in around the central Queensland area is like well over $2,000 now. So it's very pricey. So for your average 2-bedroom, 2-bathroom property on 600 square meters, you're looking at turnkey over $650,000. So you can certainly see why a lot of buyers are opting to go down the established route. But yeah, guys, look, if the supply pipeline is grim for Rockhampton, which it looks like it is, and the existing supply remains low, and those demand side metrics and future demand remain high, we might be in an environment here where Rockhampton continues to have a good run in terms of price appreciation. So for investors, I think there is a lot of upside here in this marketplace. Okay, quick recap. Let's go through, I suppose, the key points that have come out of today, right? The key data points that I think you need to absorb and take into your back pocket and use that to help you navigate the market or come up with a buying strategy that's going to get you your next deal done, right? So the first point was the median house price is still growing in Rockhampton and has not retracted despite all the headwinds. And Rockhampton is still very affordable relative to southern markets, which suggests that the market has plenty of upside in terms of room to grow and to catch up to those markets. So yeah, guys, something to think about there. Median house price still growing. You need to be on the ball. If you are on the sidelines, again, the longer you may sit on the sidelines, the more it may cost you in this instance in a growing market. So the median is growing. That's the first point. The second point is there are many suburbs still look good for high yields and positive cash flow. So we've seen that with those rental data around those vacancy rates. So you'll still get really good rents, those median rents for each of those suburbs. Well, obviously there's many of them that have a 4 in front of them. So in most cases, you're going to be in a situation where you're going to get positive cash flow. So if you're an investor, it's still a really good market to get positive cash flow and high yields. So that's point number 2. Point number 3, so from a stock point of view, current stock levels are tracking low and don't appear to be sustaining the current demand levels, resulting in price growth. So that's interesting, right? So we've seen construction of inventory, we've seen those low listing volumes, and we've seen high levels of demand, which means that when you have an imbalance between supply and demand is obviously higher in that instance, you're going to be in a situation where you're going to get capital growth. And this is exactly what's playing out here in the Rockhampton property market because of the supply side. Because of the supply side of the market, it's very low and it appears to be grim. And when we do look at that future supply pipeline, that suggests that we may be in this environment for quite some time because the future supply pipeline doesn't look good relative to previous years. And I think that's my second last point here. Yeah, you can see it there as my second last point. So absorption rate overall very healthy. I wouldn't read too much into the decrease from 95% to 75%, still very strong. I'll be doing another market update. I'd probably say maybe around December, and if that absorption rate continues to decrease, then I'll raise that and we'll start to analyze and see what might be causing that decrease in the absorption rate. And yeah, guys, lastly, overall vacancy rates super low and rents are rising. So my overall summary is that Rockhampton is very much a seller's market. Sellers are at an advantage here right now. Most of them are fetching, premium prices, and buyers are in a situation where there is a lot of competition. So if you are an investor or home buyer, just be conscious now when you go out to navigate this market. You are in a hot market and you are in a seller's market. So you need to come up with the right strategy, the right price, the right terms that puts you in the best position to get a deal done, so you can get on with your life, move into your home, and the family can start doing the things that you love to do rather than worry about buying property. But nonetheless, if you are struggling, give me a call. More than happy to see if I might be able to add value to what you're trying to achieve. But yeah, guys, that's a summary of the Rockhampton property market. If you do have any questions pertaining to the contents of this presentation, feel free to leave a comment in the comment section. Leave a like. I'd love for you to like and share this video. A lot of time and effort has gone into researching and collating all the data, so I'd appreciate if you just gave it a thumbs up. That goes to show that, hey, you've got some value out of what was covered here today. Cheers, guys. Thank you. Now, I told those home buyers towards the middle of the video that you should skip forward to the end of the market update, because there's some good gold there, and I think this might potentially help you if you are a local property buyer trying to navigate the market, and you maybe even struggling and have missed out on multiple properties, have spent the best part of 6 to 8 weeks on the sidelines, may have had your pre-approvals lapse. Having some of these tips might just help you better navigate your next purchase, or be better equipped for your next purchase. And in a seller's market, the more information and the more, I suppose, education you have, and the different strategies may better equip you to get a deal done. All right, so we can see here that the first tip that I'm pushing towards sellers, or recommending, is not sellers, buyers, is that you have your finances sorted. So don't go out in the marketplace, start house hunting without bank pre-approvals or cash mobilized, ready to go. Agents will be very, very good in this cycle of the market, right? When the market is hot, they know that they need to pre-qualify buyers as well, and they want to go back to their seller with qualified buyers. They don't want tire kickers, and they're gonna try and fish this information out of you. And if you're not pre-approved, you're most often they're not going to go at the bottom of the pile in terms of your offer, because they won't have a lot of confidence in your financial position there. So number one is have your finances sorted, and go to market then after that. Number two is you need to be swift and fast, basically, and then think terms. So basically be swift and fast. So when we have those low days on market figures, right, things are basically being bought in the first couple of weeks, so you need to be fast here. So set notifications on your phone, subscribe to alerts with agents, build relationships, get access to information and property, so you can be swift then to make those decisions when those properties come up. Get out to an open home straight away, not the second open home. Try to go to the first one. And in a seller's market where a lot of people are just trying to push for the highest price, I like to say start to think about what terms you can offer as well. So get context around the vendor situation and understand what are some of the terms that might appeal, particularly if you can't be competitive on price, because sometimes people will opt to go with your deal if it's a couple of $1,000s less in price because you have better terms. So start to think those terms through. Number three is understand your logistics and what you're willing to compromise on. So in competitive markets like this, it's often the seller that most of the deal gets skewed towards in terms of price and terms. So you have to be willing on what you're willing to. You have to know what you're willing to compromise on here. So understanding your logistics is a good way to establish that. So I'm saying here, if you're putting an offer subject to the sale of another home, then that may not be the best offer in this situation, because in this market, a seller may have 3 or 4 other properties, other buyers there that don't have those same logistical nightmares that you do, where a contract is subject to the sale of your home, or you have a long settlement, etc. So you need to understand your logistics and try and massage those around to get them to be more fit to the current market conditions right now. Number 4 is follow the price trends. So we're in a situation now where prices are rising. So if you aren't following the price trends when you go to put in your next offer, you could be way off the mark there. So if you understand those price trends, you'll be better equipped then on your next offer, and you'll be more in the ballpark and more or less have your finger on the pulse and be relevant when it comes to the price point of that property. So if you follow those trends, you're going to be better equipped there for your next purchase. Number 5 is follow the agents. So if you've just missed out on property, for example, in a lovely street, a lovely house, it ticked all your boxes, what usually happens is an agent then will prospect the whole street, right? They'll prospect the whole street, try and get another listing on that same street. They'll preach to all those homeowners on that street, say, hey, look, this is the result I got on this property down the road. If you want to sell, let me know. So if you follow those agents, build those relationships there, which is point number 6, more often than not, another property might become available in that suburb area. And if you have those relationships, you might be able to use that relationship and leverage those relationships to be the first in, or even get to transact off market. So follow agents in this instance. It could be where your next deal comes from. Number 7, establish a network of conveyancers, billing and pest, as well as brokers. So I like to say, if you have a good network in place, you can move a lot faster. So if you have a billing and pest inspector mobilized, then you have a relationship there, have a conveyancer mobilized, you can start to get contracts signed faster. You can start to get billing and pest dates low. For example, like with me and my team, we have a relationship with a lot of billing and pest inspectors. So what we do is get on the phone and say, hey, look, I propose to put on an offer on this property. I want to make my terms a little bit more nicer. Can you do an inspection in the next 5 days rather than the next 14 days? Because a 5-day billing and pest inspection looks a lot better than a 14-day billing and pest inspection. Same goes for if you're in a multiple offer scenario. If you can get your conveyancer to review the contract, make sure there's no red flags, then you can get your contract in or offer in a lot quicker, and then the vendor can start pondering on that, and you may even have the contract signed before many other parties have were able to even put on a property, because you had the network there mobilized and you've used that to be swift with the transaction. Number 8 is use resources free and paid. So things such as like all the free tools that I use to get data, to get property information, use it to your advantage. Do as much research about price trends, the market, individual properties to better gauge in terms of what you should offer, and where the price point lies. So use all the free resources that are out there, guys. Obviously, CoreLogic is a really good resource, but you probably have to pay around $1,500 there to get access to a lot of the premium information that I have access to. But look, $1,500 in the grand scheme of things could be the difference between you getting a property or not. So sometimes it's worth your while paying for, I suppose, resources and data as well. Number 9 is ask questions. So I'm a big advocate on this. Don't go to an open home, have a look around, walk out. Go to an open home, ask as much questions to the agent as possible, get as much context around the vendor, see what's motivating them, see what their situation is, so you might be able to then massage your terms and price around that best suits them, right? And that way, if you ask questions and you even start to relay to the agent your situation, when an agent gets your offer on the table, they have some context around you, and then you have some context around them, so the deal's starting to potentially marry up there because you have mutual understanding. So if you ask questions, you're going to be better equipped rather than go to an open home, walk out, put in an offer. It can be a recipe for disaster sometimes. And the last one is don't lowball. So we're in a seller's market right now. Lowballing just won't work, guys. It's as simple as that. If you lowball, you're going to lose credibility. You're going to be laughed out the door. And if you go in to put in your next offer on a property that you've missed out on because you've lowballed, the agent there is not going to take you very seriously. You probably lose all credibility there in that instance. So understand the market you're in, and we are in a seller's market, so don't lowball in the situation. Yes, maybe in a couple of months or a couple of years' time, when the market does move towards more of a balanced market or moves towards a buyer's market, then we can start to do those things. But yeah, guys, lowballing just won't work in this market. Those are my top 10 tips for buyers navigating the marketplace. If you do have any questions about those, let me know as well. More than happy to help and have a chat. Again, guys, my name is Troy Basani. I'm the owner of Capricorn Life Buyers Agency. We buy a lot of residential real estate in the central Queensland area. We have an office in Rockhampton. We service in Mackay and Bundaberg region. Also, if you are struggling home buyer, reach out. If you are an investor, interstate buyer, geographically challenged, and you need help navigating the market, feel free to reach out. Visit our socials. That's our number there to call. Follow me on LinkedIn. Add me on LinkedIn, follow me on my socials as well. I put a lot of value add content out there as well, and that might be all you need, or if you feel as though you might need some professional help, more than happy to have an initial chat and see if we might be able to add value. Thanks for tuning in, guys, and we'll catch you next time.